Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex and gold fundamental and technical analysis. If you're new, a warm welcome to you, and if you're returning, an equally warm welcome to you. And if you like the analysis that I do every week, please don't forget to like, subscribe and share. Definitely like and subscribe. Just a free way to support the channel. And again, if you're new, really our trade process, what separates Trading 180 from, the vast majority of other, weekly analysis videos that you might see on YouTube, Facebook, etc., is the fact that we employ a combination of fundamental and technical analysis. And our fundamental analysis approach isn't what you would typically see from other traders, where they're just looking at Forex factory data points. What we do is we look at we establish value through macroeconomic data like inflation, interest rates, and looking at the business cycle, GDP, as well as monetary policy and risk sentiment. And then we can go to our technical analysis and use a combination of supply and demand strategies like capture pain relief and stop hunt strategies to enter with a high degree, of confidence when entering into trade. So what we want to do first this week is really kind of just start off on what's coming up in the week ahead from a news perspective, and then get into the fundamentals and technicals on each chart. So looking at the week ahead, and we've got the US releasing the second estimate of the fourth quarter GDP alongside durable goods orders, personal income and outlays, and PCE price index. So the fourth quarter second estimate, the first estimate came out I think around about 4%, so the second quarter estimate shouldn't be too far away from that. Other GDP updates to follow include those from Germany, France, Switzerland, India, Hong Kong and Mexico. Elsewhere, the Eurozone business survey and the UK jobs report will be keenly watched. Yes, jobs report is definitely something that we look towards as well, as high unemployment means, or higher unemployment means more of a recession, and lower unemployment means a growing economy potentially. So as well as China house prices, Japan industrial production and retail sales, and Australia's fourth quarter construction output. Central banks in South Korea and New Zealand will be deciding on monetary policy. So if you're trading the New Zealand dollar, let's see what the RBNZ have to say about what their future guidance will be, whether they're hiking, holding, cutting rates, what they're concerned with, introducing more QE or holding QE, etc., as that has an effect on the value of the New Zealand dollar, which has been on a bit of a tear as of recent. So moving on to the US dollar index and Dow Jones dollar index. And so what we saw pretty much last week, we did see a bit of a gap up on, I think that must have been the Wednesday, Thursday, Friday, and we've pulled back into this demand zone. And really just the dollar index is just a measure of dollar strength against a basket of currencies like the euro, the yen and the pound. And so this week we did have a bit of upside downside, but overall I think in the short term, and when I say the short term, I'm talking about maybe the 1 to 3 month period, I think that the market is likely to range. So I don't know exactly where the market is going to range from. Who knows? Nobody knows. But I think between this high here and this low, I think the dollar index will probably start to range, because there's been some good news out regarding the dollar, and in fact it could range from here and here as well. So for me, I use this as confluence, and if there is some bullish price action on the dollar index, it means that overall dollar strength should be coming into the market, and then you want to go to one of the dollar crosses like the dollar yen, dollar Swiss, to look for potential confluences on your buy trades. So there is obviously some news, again, like I said, coming out this week regarding the week ahead. So fourth quarter estimates, but I do think that should potentially be positive. Also, we did have last week just the week just gone, the US economy surges into 2021 as sales output tops forecast. So there was some US economy started 2021 with a bang as retail sales and factory output accelerated, and expectations continued to build for another jolt of government stimulus, setting the stage for what could be the best year of economic growth for nearly 4 decades. So expectations for gross domestic product growth increased for the first quarter and every subsequent 3-month period through mid-2022, according to the most recent monthly survey of economists by Bloomberg News. Economic growth this year is estimated to be the strongest since 1984, when Republican Ronald Reagan was president. So that should be a tick in the column of why you may want to potentially look for buying opportunities for the dollar, because if the dollar starts to strengthen and as far as the economy starts to grow, then there will be demand for the dollar, and then what you want to do is really just look to trade the dollar against another country and currency that potentially may not be doing so well. That's what's known as a divergence trade. You're trading divergences. Why one country is doing well, you want to buy that country and currency, and then you want to sell a country that and the currency that isn't doing too well. So there's been some positive news surrounding the dollar as of recent, and the prognosis, a vaccine surge is coming with millions of doses promised. So new supply should help the pace of vaccinations double in the coming weeks. Again, why is this worth noting in this? But really because if you have the population being vaccinated, then you have less, the spread of the virus is contained, and then that affects GDP because people can get back to work, some sort of normality. If you still have the fear on the spread of the coronavirus and you have continued lockdowns, then your economic growth and gross domestic product is going to be delayed. So one of the reasons why the pound has been surging recently in recent times over the past few months is because of this exact same thing, and we'll go into that when we get into the pound. So the US, for me, potential buy. Again, nobody knows exactly where. All we do is we just understand that if this is a bargain and the market agrees with us that this area here is a bargain for the dollar, then brilliant. If not, if prices, dollar index comes down into that area there, then that's definitely going to be a potential bargain, depending on obviously if we still have some decent news out and the fundamentals say so, because price is not value and value is not price. People get this confused. You can have something that is undervalued, and you would really only know that if you understood what something, how to determine value. So price can come down, but it just means that you can get in at a better price, right? That's what you're supposed to be doing as traders, is understanding value. Price action is not king, because price can be manipulated, and price is manipulated every day. So how can something that is manipulated be the king? It's not. So just understand that if this level doesn't work, if the dollar doesn't necessarily, go up here, it means that a lot of the big banks potentially are looking to buy the dollar cheaper, and that's the theory. So you've got a lot more potential upside, if that does happen. If you don't believe what I say, and again, this is not financial advice anyway, but you have your own fundamental analysis and own opinions on the dollar, then what you're looking for is sell trades. You're looking for short trades back up into that area of supply. If you get that confluence, of course, you're not trading the dollar index, you're just looking for confluences. Or if price does do something like this, let me just delete all of this this analysis. If it makes lower highs and lower lows, so let's say, for example, it breaks through that area of demand, then you pull back to an area of supply, which would be here, and then you're looking for that confluence. So for me, again, dollar continued potential buy for the short term, 1 to 3 months probably, unless something changes. And let's look forward to now the dollar yen. And the dollar yen, this past week or two has made higher highs. We've got a bit of demand right here, and in a risk on scenario, we usually the currency with the higher interest rate should win, and the Japanese yen interest rate is actually minus 0.1 at the moment, and I think the dollar is actually 0.25. So you've got some, if you're looking in a risk on environment to make a return on your money, what you're going to be looking to do, buy the Australian dollar, got that on the brain, the US dollar, or buy the Japanese yen. It's going to be the dollar all day long. So with that being said, if we do get any kind of pullbacks into a nice demand zone, that would be a decent buy, again depending on the strength of the dollar, because there is this overarching sentiment that the dollar is potentially getting weak as it stops becoming really the global reserve currency, and there's a shift away towards the dollar dependence. So that is the overarching and the really kind of the medium to long term view of the markets. But in the short term, doesn't mean in the short term that the price of the dollar can't go higher. So let's see what happens there. If risk off does start to come into the market and the Japanese yen is a safe haven currency, then what you're looking for is a pullback into any kind of supply zone a bit higher, and then look for any kind of short trades. Moving on to the dollar Swiss. And the dollar Swiss, I'm actually in this this trade. I got involved in and around this area here. So let's see if prices can continue to go higher. And I do think the dollar should want to go higher against the Swiss franc, but who knows? Again, a nice demand zone where price made new highs, a strong demand there, and then pull back into that zone, and then we had a really nice opportunity to get long. Now again, nobody knows how far prices will go, but it just depends on whether the market agrees that this is an absolute bargain, and if it does, then we're just getting a bit of a pullback before potentially moving higher. Again, if it's a case of prices do pull back this week and come down here, longer term, I do think that the Swiss franc is very expensive, and the Swiss National Bank have actually said themselves that they're intervening, and they also want actually a cheaper Swiss franc, so they want prices to actually be up somewhere around here. In fact, they want it to be all the way up here if they can. So let's see what happens with the Swiss franc. And the Swiss franc is a risk off currency, meaning that if there is uncertainty, then it should want to strengthen. So I think this zone here is actually a decent area to look for some short trades if risk off does come into the market. So I think for me the ultimate buy for the dollar though is going to be down into this 87. That's where that area there is really, really, really nice for a potential buy if we can get down there. Moving on to the dollar CAD. And the dollar CAD, we are really at some lows. We haven't seen these lows since 2018, April 2018. So depending on the CAD for me has always been a buy since we are in a risk on environment. Canadian dollar has been going from strength to strength, but do you want to be a buyer of the Canadian dollar in and around here? Probably not. So the two ways to kind of look at this would be either, I think what I have to do is move this down here, because we actually have made lower highs and lower lows, so we've got a bit of supply there. The first area to look for any kind of short trades would be in here, and then if you're looking at daily supply zones, but then going down into the lower time frames and looking for trades, that would be the first area to look for. Personally, I really kind of prefer prices to come all the way up to here before looking at getting potentially short. But also as well, on the flip side, if you are looking to buy the dollar, if you're looking at dollar strength, then in fact this is a really nice potential buy trade setup. or area anyway that you want to look for a potential buy, because this was a bargain back in January, and if the dollar is going to potentially strengthen, then that should be a decent buy technically. From a fundamental perspective, I'm not really keen on buying the dollar against another strong currency like the Canadian dollar. So for me, it doesn't matter what the technical setup is. Fundamentally, it's got to have some fundamental confluences, and that's what that is. So what you saw here this week is a move down, and then a move back up, more selling, and then a nice day trade right there. But for me, I think that's probably the limit of the move. Or what you probably want to see is you want to see proof of value, so price to really kind of break through that area to prove that the Canadian dollar is an absolute bargain there, and the pullback into some sort of supply zone, and then look for some sort of short trade. That's how I would play that. Moving on to the New Zealand dollar, US dollar, we've again come up to a really nice high, and this is going to be watched by a lot of traders, because this is really the 2021 highs. So this is the high of the year. So we do have again the Central Bank of New Zealand, the RBNZ, coming out and basically looking to guide monetary policy. Now, if they come out as very dovish or surprise the market, then you could see actually a really nice short trade. And I think as a technical setup, I'm always looking to buy at, say always, but from a technical analysis perspective, I really like the highs and lows of ranges. That's really the optimum trade. Going into from a buy trade perspective for the dollar, for the US dollar, then you look for the New Zealand dollar. If you do get a pullback, would be somewhere like here, but this would be a nice trade for the US dollar if we can get some dovishness for the New Zealand dollar, and again some positivity around the US dollar this week. Moving on to the pound dollar. And the pound dollar prices came up into a bit of a supply zone, which basically was created in May 2018. And as I always say, that what you want to do is, when a supply zone has been created from years ago, take that with a pinch of salt. And the reason why is because whatever drove prices down here is not going to be the same thing fundamentally or risk sentiment wise that is going to drive prices down here. So you have to be aware of that. The pound again has been on a tear, and it's really been mainly because of the vaccine rollout. So the market is always future and forward thinking. So it's always thinking about or focused, I guess, on the next 3 to 6 to 9 months. It's not really focused on what is now. It's buy the rumor, sell the facts. So if the rumor is that the UK are vaccinating, they're rolling out the vaccine ahead and on schedule, or ahead of everybody else, then that just means that they should get their economy back on track sooner than everybody else, which then means that the market is pricing in that scenario. So sterling is the best performing major currency this year, and the UK assets have benefited from a swift vaccine rollout. So again, the pound surged to $1.40 for the first time in nearly 3 years, as investors bet the UK's rapid vaccine rollout will help pave the way for a reopening of the economy this year. I've been saying this. We've been in the group, in our private Discord group, we've been saying this since last year, that this is been the this has been one of the plays. The other thing about the pound, though, which has made it really quite difficult to trade, in fact, is this switch to negative interest rates, and whether they will or they won't. So even though, yes, the pound has been on a tear, it's been a difficult trade to really take, because you've had the Bank of England or members of the Bank of England talk about negative rates, right? So BOE's, I think you pronounce it Veleg, gives strongest backing yet for negative rates, and this gentleman is a rate setter. Yeah, so his opinion matters, and he says that there's little QE can do to add stimulus and prefers sub-zero rates for dealing with labour market weakness. So this policymaker is a voting member, and if he's voting for negative rates, that isn't good for, or say that isn't good, but that should have an effect of weakening the pound. Yeah, so an expensive pound during a recession is not desirable. In fact, people think that a stronger pound is good, but it actually isn't, especially when you're trying to recover economically. So there's really a battle going on within, the Bank of England, the board members regarding the strength of the pound, the recovery, what traders think, and also what the Bank of England think and how they're going to balance the economy and jobs. Because, like I said, to make the British and UK economy competitive, you're going to have a weaker pound, and the strong pound isn't great. So negative rates are, or basically Bank of England has resisted global rates pushed below zero, like Japan, the ECB, and Switzerland. So it has been a tough trade. If you have bought the pound and traded the pound higher and higher, well done for holding that trade. It has been a bit of a tough one, but I think overall this is coming really to, I think, the limits of its move. So if you do want to get short on the pound, and I'm going to delete this supply zone, what you want to do is look for proof of value, proof that there is supply here, and then look for some sort of trade back up to a supply zone, which is going to be right here, and then look for some potential short trades, because we've been in a trend since early September, this up move, and markets go from trending markets to ranging markets, or accumulation phases, whatever you want to call it. So at some point the market has to agree where roughly price is, and it looks like 140 was a target. So let's see if we can get some sort of ranging market, and if we do range, then where we're going to range from, and this may be the area where you want to look for a ranging type setup. If you're looking to continue to buy the British pound against the US dollar, then it's basically a pullback into one of these demand zones. I probably prefer, if I was looking to trade this, probably something down here, as you've got some support and resistance as confluence down into that zone right there. So this 1376 area. Moving on to the euro dollar and the euro dollar. So again, a bit of a tough one. Not the clearest of divergences, but there is, in my opinion, a divergence there between Europe and the US. And as we've already gone through, the US is actually doing decent, yet the euro area is weakening or weakened by lockdowns, supply constraints. So regions, factories have been a stronghold through the crisis. Firms becoming increasingly upbeat about recovery projects, but business activity in the euro area economy shrank for a fourth month in February as services struggled with continued lockdowns and factories ran into increasing supply constraints. So there's again some divergences going on there, as well as a potential rollout of the vaccine. So again, supply constraints. So where you've got one country that potentially is looking to grow, you've got another country that potentially may be a bit offside when it comes to their GDP, or lagging when it comes to GDP. So with that being said, if I'm looking to potentially buy the dollar, hopefully there should be some good news, or there is some good news, and Europe is lagging behind, then the idea is hopefully we see prices continue at least to the downside. Who knows what will happen, but that's pretty much the idea. We're already, a lot of the guys in our group, private group, are already in this trade to the short side, and let's see what happens here. And again, if that doesn't work out, so it's okay. It's only one trade. You're looking at a bit of a fresher area around this 122 area price zone to look for short trades, and if not, then you've got that. And if your idea is correct on the euro strengthening, or sorry, the dollar strengthening against the euro and the euro weakening against the dollar, then you've got a lot of downside potential for that to play out. A really nice trade to the short side. If Europe does start to grow though, and things turn around for Europe, the European economy in the short term, then I honestly think that the euro is definitely a continued buy. So I will switch my fundamental bias and directional bias depending on the overall fundamentals. So I do think that if prices do come down here eventually, and let's say, for example, we get some really good news out in Europe, then in fact I think the euro may be a potential buy. But for now, short-term wise, I'm looking at short trades on the euro dollar. Moving on to euro yen, and the euro yen, we've had well, that zone didn't really work out, and that was probably due to again in a risk on environment, probably the euro is the one to buy. So it doesn't matter how much technical confluences you may have, if the market sees the value of the euro as being higher, there's no technical analysis that's going to stand in the way of that. So what you're looking for now is pull back into a demand zone if you want to get long on the euro. That's actually a very nice zone to get long on. If you're looking for short trades, then you're looking for again a pullback for supply to appear somewhere around here. That would be where supply would be, and then you're looking for a pullback into supply after it's done its move, and then looking for a short trade in there. Aussie dollar. So Aussie dollar has gone again from strength to strength. Look at this. The Australian dollar has really been a buy, and again, the guys in our Discord group have known about this for quite a while. We were long on the Australian dollar from like last year, October, November, once the risk on sentiment came in the vaccine rollout. And in fact, going back to a post or two from the 24th of November, where we were talking about the Australian dollar, and there's an article, or one of the many articles that we were looking at, for example, buying the Australian dollar, and it says the boost to the global economic growth in 2021 should benefit the Australian dollar. It says analysts at investment bank Goldman Sachs, who have told clients buying the currency forms one of the top trades for the year ahead. So this was last year, and this is not just one analyst saying this. It was several analysts saying this, which we done our research, and we understood why as well. It's no good just looking and reading what analysts say. You have to understand as well why that play is gonna is likely to take shape, right? So from this was like 24th, and you've seen pretty much what happens here. And again, nowhere will you see him mention anything to do with Elliott wave or any kind of Fibonacci trades. It's all fundamental analysis. It's talking about he talks about Commonwealth currencies, right, tend to perform well when the global outlook improves due to their relatively high exposures to global trade. Both Canada and Australia are handling COVID fairly well, and their central banks should be done cutting rates. All fundamental analysis, nothing to do with the technicals, right? Technicals should be used as just a way to enter your trade once you determine your fundamental bias. And these are the smartest guys that are saying these things, not these so-called technical analysis guys who just literally think that fundamentals don't work. They just don't know how to trade fundamental analysis. So when you've got situations like this going on, doesn't mean it's going to keep going higher, etc., because there is potential strength for the dollar coming in. So just be mindful of that. But overall, that is going to be the buy trade. If, for example, we do get something where we get proof of value for the US dollar, then this actually, if your prices kind of do something like this and then come back to that zone, that would actually be a decent selling opportunity as well. Because again, we've been in a trend for quite a while, and a strengthening US dollar could lead to a ranging market. So, but we'd want to see that, on price first and play out on price first before looking at getting short, because if we look back, there's really no major levels or no major supply zones that I would be interested in. I really want to see proof of value first before looking at any type of short trades. But the path of least resistance at the moment is to the upside, so this is going to be your first area to look for any kind of long trades. And if prices do come down here, that's going to look like a bit more of a bargain. Aussie yen and Aussie yen again, same thing. This was really the trade. Aussie yen, really nice trade. And again, in a risk on environment, when everything is when investors are looking for a return, when there's a lot of certainty, then that's brilliant. In a risk off environment, the Japanese yen does well, because it acts as a safe haven when there's lots of fear, uncertainty, and doubt. So, but you haven't seen that with the vaccine rollout, global recovery, and this is why you see prices trend. So what you're looking for is a pullback into that zone there, or you're looking for a pullback into zone there, or even a zone here. So again, if prices do come back into these zones and the fundamentals are still the same, then just look at it as more of a bargain price for you to get long on those trades, because again, price is not value and value is not price. Looking at gold. So gold, finally, we have come down into an area, a very interesting area for gold. Now, there has been fundamentally, one sec, here we go. So gold goes from a star commodity to laggard in shocking reversal. Quite sensational, but gold has began the year with lofty expectations on the back of record highs and its biggest annual gain in a decade. Instead, the precious metal is off to the worst start in 30 years. I mean, that doesn't really mean anything. What really you should be looking at is understanding things like inflation. If you believe that inflation is coming back into the market, and what is inflation? Inflation is really a high inflation, or higher inflation is currency devaluation. Then gold is a hedge against inflation. So yes, in the short term you may have this start to happen, but for anyone who understands the longer term game, this is an absolute bargain. And when you think about where gold was a bargain from last year, so prices contained between this low and this high, all we've had is a pullback to what is known as fair value. Between an expensive area, because that was obviously expensive for gold. If it wasn't expensive, then prices would have went higher, and this was an absolute bargain area. And if we understand that to be an absolute bargain because prices went higher, you can proof that this was an absolute bargain. So between an expensive area and a bargain area is fair value. So all we are really at is a fair value area. So anything below this, if you consider the fundamentals, with the amount of money printing that's been going on, QE going on, right, and the devaluation of currencies, if you're still a believer in that and you want to trade that analysis, then this is a decent area to look to load up on gold. And the cheaper you go, or the more prices go down, is the more that this looks like an absolute bargain, because anyone who didn't load up last year, or anyone who's basically cost averaging down, everyone who bought here, and then basically all you do is you're cost averaging as prices go lower. These are seen as bargain areas, right? Bargain. If you again believe that there is dollar devaluation, currency devaluation in general, and yes, I do believe in the short term that the dollar may want to rise in value, which is probably causing something like this to happen. Doesn't mean that because the dollar rises that the gold is going to go down. You can have gold and the dollar go up in price at the same time. But the point is that fundamentally what is driving gold at the moment could just be again, short-term sentiment, but look at this as if you are anyway, look at this as a potential buying opportunity for the long term, or for at least the medium to long term. So let me just clear some of this analysis up. And again, this is not financial advice, it's just my opinions. Please do your own research. So a really nice buying opportunity, I think, here. And if you are looking to continue to sell gold, then you are looking at this area here for a sell trade. So there's supply there. So that would be the area to look for potential short trades. But for now, I think this is decent. If this price does come down even to down here, it's just going down into the lower time frames to look for some technical setups if you haven't got involved in anything around here. So so guys, that's it for this week. Again, please don't forget to like, subscribe and share with your fellow trading colleagues, and until the next video, I hope you have a great trading week. Take care.